Hello and welcome to Clarksons webinar from Oslo. Today I'm joined by 4 colleagues from our office. I'm going to quickly introduce the team before we actually go into a little bit of a brief introduction about the subject matter we're going to be talking about today. We have Erik, who's head of offshore shipping and analysis. We have Fredrik, who's the head of our Renewables division. We have Kenneth, who leads the green transition team in Clarksons, and we have Tønne, who works in our securities investment banking division. So today we're going to touch on the subject of energy, and the reason we've got these 4 guys together is because we want to have an informed discussion about energy, and these guys all come from different backgrounds and have different viewpoints about the same subject. So hopefully it'll be a interesting conversation. And I know from the outset, I can tell you that they don't always agree with each other on this subject. So it should be quite interesting to see where they come from. You know, it's been very difficult times for the world. We've seen a lot of change very recently. We're now post-COVID. We've had inflation. We have a war in Europe. There's a lot of uncertainty, but there are some phenomenal targets that have been set. And the idea of this conversation is to see how those targets are going to be met. And we're going to have some ideas from the team now on how they see those targets and where we're going to go to actually try and achieve those things. So first of all, I'll go around the team and I'll ask them to give us a couple of minutes just to explain their thoughts on where we are now and what the future looks like with regards to energy. So I'll start with you, Erik, if that's okay. If you can just give us a couple of minutes and your thoughts, please.
Yes, sure. Thank you, David. Of course, I think we are in an energy transition. It has started some time back, and it's of course gaining momentum with all the investments and all the policy formation that we are seeing, trying to enhance the pace and the momentum behind the energy transition. I think there are a few fundamental aspects when I think about energy and when we discuss energy with clients. And I think the first element here is that we need a lot of cheap, reliable, and abundant energy. If you look to history, that is basically what has fueled human progress ever since the Industrial Revolution and the first Industrial Revolution. And energy return on energy invested, I think, is a key concept when we are discussing this, when we are trying to understand this. So basically, we need surplus energy. So that means that we need to get more energy out compared to the energy that we put in. And if you look to the different energy sources as they are currently, fossil fuels, for example, have very high energy return on energy invested, whereas renewables is more challenged in that aspect. So it has less energy return on energy invested. And basically, if we don't manage to have surplus energy, we don't manage to fuel sufficient economic growth, sufficient population growth, and all the things that, you know, leads to human progress. And I think this is a key challenge to understand when we are discussing the whole energy landscape. And I think levelized cost of energy is another aspect which we are spending a lot of time on discussing when you're looking at fossil fuels, for example, versus renewables. Proponents of renewables are arguing that, you know, on the levelized cost of energy basis, today renewables are very competitive versus nuclear, versus natural gas perhaps, and also versus coal. But that is before you start taking into account the added system costs due to the inherent intermittency of renewables, for example. So I think, you know, all these aspects are important to consider when we are talking about the development of the energy landscape. And my view is basically that the energy transition is probably going to be slower and it's going to be a lot more challenging than what many are currently forecast, and in particular some of our politicians who are saying that, you know, we're going to move into a green energy world, you know, somewhere between 2030 and 2050. I think there are substantial challenges to that on a number of dimensions, including the access to raw materials and so on that we need for green energy developments. And in the meantime, we're going to need a lot more fossil fuels, in particular oil and gas. And I'm concerned about, you know, the lack of investments that we are seeing into upstream oil and gas, in particular when we're looking at, you know, both the offshore energy space and also in the shipping space in terms of transportation for tankers, for example.
Okay, that's very good, thank you. Fredrik, you're next. Just please, again, give us a view of renewables as you see it. You lead the renewables team in Clarksons and specifically in the offshore area. Where are we right now and what does the near future look like?
Yeah, thanks, David. And Erik, always interesting with your take on things. And I also agree, energy transition is a marathon, right? It's not a sprint. And offshore wind, which you and I, David, have been working with for a long, long time, is definitely a marathon, but I think we're allowed to do also a few sprints here and there. We've come a long way from 20 years back when we saw the first bigger turbines going into the water. It was deemed kind of an experiment back then in Denmark, taking onshore turbines, putting them offshore. And the market has grown in this way and industrialized itself now that it is a fully fledged energy system you can put out into the ocean and generate green electricity. So it is, in fact, competing to a large degree on levelized cost of energy with the already existing energy sources. But there's, we need more. We need it cheaper. We need to, build out more, cut cost, make it smarter, create better logistic solutions. So it is a alternative to onshore wind, onshore solar, nuclear in other countries where coal is a big thing, right? How can we deploy a offshore wind system to these regions that haven't had the economics to deploy these systems? But we're getting there slowly. So of course, I'm naturally the biggest fan of offshore wind, and it's come a very long way, and it's definitely part of the energy mix in the EU, in Europe. And it will become part of the energy mix in the wider context of the world, in the global. Look at Taiwan, look at South Korea, Japan, the US is starting this year in larger scale. And that is making this a global infrastructure or energy infrastructure project, which will create an overall lower cost of energy for this. So my take is it's come a long way. And we're just at the starting point, actually, at what we're facing going forward.
Okay, thank you. So Kenneth, you lead the green transition team. So you're helping companies, plan and mitigate risks and find a solution to this green transition. So what's your view on where they are, where they're going, and how long will it take?
Yeah, I think the key word there is to find solutions, and currently there aren't that many solutions. So I think it's an extremely interesting time. We're going through an energy crisis, and at the same time, we're trying to decarbonize our main source of energy, fossil, moving from fossil-based fuels towards renewable electricity-based fuels in the shipping, in the maritime space. I think that, as has been said by my colleagues here, Erik, and it's going to be extremely challenging. It's going to be a very, very slow and painful process, and I think part of our role here in Clarkson is to help our clients better understand or make more informed decisions based on facts rather than opinions. Because when it comes to decarbonization and future fuels and the applicability of hydrogen as a feedstock, etc., the discussion very often tends to become very opinionated, and the fact seems quickly to disappear out the window. And the challenge is that we're going through, as I said, this energy crisis, and it's not just Europe, it's in Asia, it's other parts of the world. It's happening at the same time, and the inefficiencies that we're facing in our current pathway towards lower emissions, or the solutions that we currently think are the future solutions, we challenge that view and might not be as convinced. Then on the other side, we see that our clients are struggling between having to be compliant with more complex regulation and requirements to decarbonize, but at the same time, it needs to be economical, and they also need to take shareholders and social pressure into consideration. So there's a balance here. And for many clients, there seems to be an opinion that it's either or. You go all in, it needs to be perfect. And it's cliche to say, but to a large degree, we are seeing that perfect is the enemy of improvements to a large extent.
Yeah, okay. Very interesting. So Tønne, your turn. We've got technological challenges, we've got global issues, and we've got issues in the banking sector as well. But all of this green transition requires money. We need money to make these things happen, and we need to find the money from somewhere, and people need to have an appetite for investing in these projects. What's your take on the current situation with regards to energy and the green transition and where the money's coming from?
Yeah, well, I think a good starting point, David, is that energy has, I'd say, re-emerged towards the top of the agenda for many investors for two main reasons. For one, investors are looking at the same headlines as all the rest of us throughout the economy when we talk about energy transition, energy crisis, energy security. And then I think the second reason is that returns have been stellar in the last few years in many parts of the energy sector. You look at over the last year, many oil and gas stocks have doubled. You see in energy transportation and shipping and tankers, et cetera, we've seen stocks double and triple and even beyond. And in offshore wind, we've seen many of the supply chain names perform very well. So the good thing is that the focus is returning. But in many cases, those sort of stock performances, equity performances, are reflecting, a theme that Erik touched on earlier, which is really underinvestment for many years in the past. And as we saw the global economy return after COVID with high levels of growth, and yet the supply side of many of these businesses has not grown, we've seen essentially an inflation in earnings. But this is not going into new investments. So when we start thinking about the future and we start thinking, how are we going to get to 2030 and the supply chain that stands behind that in energy, I think we're going to go from, let's say, a normalization and improvement in earnings to something that becomes a problem. Yeah. So the positive outlook is there for the sector. But I think from a developer perspective, an oil company perspective, there are plenty of pitfalls and risks along the way. So what investors are looking for is more certainty, right? Yeah. So certainty is generally what investors want in order to be able to provide capital and provide capital at a low cost, which is what we're going to need. There's a recent report that said that to get to net zero targets in 2050, we'll need an additional annual spending of $3.5 trillion on physical infrastructure. And so I think that we're going to have to see a new approach when it comes to supply chain and investment, a change in business models, and I think that we're going to have to see a more proactive approach on the part of the energy industry, and making sure that the required investments on the supply chain side that will be needed in order to be able to reach these targets are going to be achievable. Okay, cool.
So thanks for giving me a quick view. Again, just so you're aware, I mean, these guys all work within different divisions within one company. So I've got some more questions now to fire at you. So Erik, I'll start with you again. So oil and gas. Yes. Is it dying? I think it'd be really interesting to know. We've seen a lot of turmoil recently. Obviously, we're not getting oil anymore from Russia, in theory. So the whole supply of oil has been disrupted. So where are we with oil, the investment in oil, and where is peak oil? Maybe that's worth a little description. And how long do you think oil and gas is actually going to be part of our future going forward, and part of the bigger energy mix?
Okay, so that was quite a few questions in one go. So if we start with the first one, I definitely don't think oil and gas is dying anytime soon, and that plays into your question about peak, and I'm guessing you're referring to the issue of potential peak demand and not peak supply, which was a discussion a couple of years back and which is re-emerging again now. But in my view, peak demand for oil is not until 2035 at the earliest. And then you could look to various reports, various scenarios, and even if you look to the big energy agencies, taking the International Energy Agency, taking the US authorities and the EIA and so on, they have quite different perspectives on where they expect global oil demand to be at if you go out to 2045 or 2050. But in the most realistic scenarios, in my view, we're not looking at the potential for peak demand anytime before 2035 at the earliest. And that's based on looking at a lot of different data and where we are currently heading and the progress of the energy transition as a whole, and the challenges I see with, increasing the pace of that transition. And I think when you understand oil, or when you want to understand oil, I think it's important to realize that all of this capacity that we're building out in terms of wind and solar is mainly substituting other sources of electricity generation. So it's substituting coal, it's substituting perhaps to some extent nuclear, and so on and so forth. But more than 60% of global oil demand is for transportation purposes. So if you want to start curbing the global demand growth for oil, you need to start with big-time electrification of transportation. And that's starting now with personal vehicles and accelerating countries like China, in Norway, of course, to some extent in parts of Europe. But despite that fact, it's going to take a lot of time just to replace the whole global personal vehicle fleet. And then you have trucking and heavy transportation, then you have aviation, then you have shipping, and all of these sectors are going to be quite challenging to decarbonize. On top of that, of course, you have industrial usage of oil, petrochemicals and so on. And just to put that into a little bit of perspective, when the IEA put out their Pathway to Net Zero report, one of the arguments in that report was that, well, the upstream investments that we're seeing globally today are sufficient to meet the global demand in those scenarios. But that was a scenario which was forecasting that global oil demand from this year, or actually from last year, was going to start dropping by almost 2 million barrels per day per year.
Yeah, okay.
And today we are increasing global oil demand probably this year by somewhere between 1.5 million barrels and 2 million barrels per day. So there's a gap there potentially of 4 million barrels each year. So the trajectory that we're on is for increasing oil demand for the foreseeable future, then perhaps flattening out. And the investments which are going into fossil fuel production today in terms of upstream investments into oil and gas are far from meeting that demand growth and compensating for the underlying depletion.
Okay.
So I'm concerned about the investments which are going into the traditional fossil fuel business, because we're going to need that oil and gas. But still, it's very challenging for both oil companies and investors to continue to invest sufficiently into this sector due to the green targets and the need to decarbonize and so on and so forth. So it's a complex challenge, basically.
Good sort of leading on from that, Kenneth. And so with regards to transportation and the green transition of heavy transport, I mean, you're especially focused on the marine industry, but there are parallels that can be drawn to trucking, aviation, and other modes of transport. Do you see the alternative fuel stock being available, the right type of fuel stock being available, the competition for that fuel stock? Where are we on that technology pathway? What do we need to make that happen over time?
No, I think it's absolutely a huge challenge. Replacing oil on non-stationary use in transportation. Yes, we've seen the slow start of electrification of the car parks happening in certain parts of the world, but it hasn't accelerated to that large degree that is needed in order to reach the various targets that have been set forward. We've seen countries like China and others have ramped up their dependence on coal to produce the electricity that goes into electric vehicles. There is a current ambition to, I would say, electrify the marine fleet, not directly in terms of electricity, but having electricity being the feedstock for future fuels. You could look at it as either being ammonia or methanol or any type of synthetic fuel. The starting point for that is electricity, access to renewable electricity. The challenge that the market doesn't seem to realize is that there is a huge inefficiencies in current technology when you try to convert electricity into any type of synthetic fuel. In general, you lose about 50% in that conversion efficiency. And then, of course, you have low conversion efficiency on your internal combustion engines. That's nothing different from fossil, but it's still a factor. So it means that at the end of the day, you need an enormous amount of energy in relative to what you get out on the opposite side.
Yeah.
And this is nothing unique to the maritime space. It's something we're seeing in this whole discussion about hydrogen economy. So in general, if you say that an average project would probably yield less than 25% on the output side relative to what you get in, it means that we need to have an enormous amount of renewable electricity in order to do that. And speaking of hydrogen, when we have, because that's sort of the hottest topic in shipping is hydrogen-based fuels. Either is it going to be methanol, or is it going to be ammonia, or is it going to be synthetic LNG, etc. But another very valid point that the industry hasn't fully taken into consideration is that the 94 million tons of hydrogen that we're currently producing emits about 900 million tons of CO2 per year. And 99.99% of all that hydrogen is fossil based. It's either fossil or some of it is actually from coal as well. And it's consumed almost immediately after production at the same spot. It's not transported around. And now we have this ambition that over the next couple of years or within this decade, we're going to enable a hydrogen-based economy where we're going to have abundance of it everywhere. We're going to transport it around the world, and we're going to use it in a very, very inefficient way of converting it into alternative fuels. And I think that is going to be extremely challenging to deliver on. So I would say that currently, yes, the green transition is absolutely a must, and we must take this seriously, but we should try and focus on more realistic solutions, and we need to realize that I think in this current phase where we are, we're talking about the green addition, not the green transition, because we're going to need green on top of whatever we have, and then yes, eventually that green will outgrow the fossil, or hopefully, and we'll be able to curb emissions and eventually eliminate it.
Yeah, yeah.
I just wanted to add one point to the discussion between Kenneth and Erik, and I think that it's important to keep in mind when we look at these long-term forecasts and we talk about the future to 2030 and to 2050, the extremely high level uncertainty that we're dealing with, right? We're dealing with very small confidence intervals, right? So when we talk about 2030, 7 years away. If you think back 7 years in time, it was early 2016. I mean, we've had the rise of populism in politics. We had a global pandemic. We have a land war in Europe. I mean, none of us saw any of those things coming, right? So there's obviously a lot of black swan events that can happen that can change things. But also, I talked about the trillions of dollars of investment that are going to be going into this project that is the energy transition. And I think that we don't know what the result of the deployment of that scale of capital is going to result in. And so I think that we have to be quite humble in understanding sort of how fast will we reach peak demand? Will we reach peak demand of oil anytime soon? I think Erik makes a lot of very good points, but my point is that there is uncertainty. And when you come to a very high level of uncertainty about that, and when you come to an investor perspective, this really matters, right? Because if we look at many of the segments that we deal with here in Clarksons, we talk about offshore oil and gas, or we talk about tankers and energy transportation, those sectors have performed extremely well in the last few years, right? I mean, tanker stocks tripled. We have very, very high rates, right? And yet, if you look at the order books, then the investment in new assets, it's very small, right? The order book for tankers is 3-4%. If we had this level of performance in these segments, a decade ago when these topics were less relevant, we would have seen 2, 3, 4 times more investment in new assets than what we see today. So while I think there are there's a lot of smart analysis, I think that investors are aware of all of this uncertainty, political, economic, technological, and otherwise, and that is holding back investment. It is happening. You can see it in the numbers. And so we will need to see more action in order to avoid, let's say, the worst consequences of that underinvestment, whether we talk about vessels, or we could talk about raw materials, copper, et cetera, which we'll need for electrification, supply chain.
I absolutely agree, and I think there's definitely a lot of uncertainty, and but what we can be certain about is that it's going to be massively inflationary. This transition we're going through, it's going to be extremely expensive. In short, we need access to more of everything. minerals, energy, absolutely everything. We're going to, if we're talking renewables, or we're talking shipping, traditional shipping, whatever it is, we're going to need absolutely more of everything. If you take, again, going back to shipping, because that's sort of my main focus, but just to decarbonize shipping, we're 2.3% of global emissions. We would be equivalent to the 7th largest country in the world if measured that way, but we're 2.3%. The amount of energy needed to decarbonize us as an industry based on today's technology is about 2,000 gigawatts of renewable electricity. The global installed capacity that we've built over the last century is 3,000. So we need 2/3 just to decarbonize 2.3%. But instead, we could have used, or we could use, or what we could achieve with 2,000 gigawatts of renewable energy would be to decarbonize 60% of coal or electricity production, which would take down global emissions by 15%. And again, because we're making these suboptimal decisions, that I absolutely support that we need to decarbonize shipping, but I'm not sure if using renewable electricity is the best and most efficient way of doing it. And because we're making these suboptimal decisions, it's going to lead to even higher price growth or inflation pressure across everything, because we're not doing it the most efficient way across the bigger picture.
I agree very much to that. I think that's one of my key points as well, that when we are, progressing in this energy transition, the things we do and the policy development needs to be based on a proper fact-based understanding of the energy systems and how the energy systems actually work. So I also agree with you, Tønne, that of course there's uncertainty and there's black swan events like a pandemic, or we have technological development, we have, in terms of offshore wind, for example, we've had learning curve effects, we've brought down the costs and so on and so forth, but the physical properties of the sources of energy are still not, changing to any material extent. So, no matter how much you bring down the cost of offshore wind, for example, or solar, it's still going to be intermittent. That's an inherent feature of renewable energy, if you disregard hydro and so on, right? So there is an inherent intermittency in that source of energy generation. Now that will need to be compensated for as we increase the percentage of renewables capacity generation into the power mix, basically. And once you start taking into account, the complexity and the costs of adding storage, for example, to this mix, you have a different cost perspective. And this is not going to fundamentally change over the coming years, no matter how much we push towards that direction. So the point is that the policy development needs to be based on a proper understanding of the system. And the problem, if we have flawed policy, is that you will have public resistance to it, because it's going to make your power access or your electricity access more uncertain. It might make it more costly, and people will eventually revolt against that. And I also think if you have some examples of, call it, flawed policy development. So we are now very happy in Europe, for example, by the fact that we have sort of managed to get less dependent on Russian gas. So we've done that by cutting down consumption to some extent, shutting down some industrial manufacturing, curbing household consumption to some extent. But we've also done it through purchasing LNG cargoes to a large extent. Now, we've actually outbid countries like Pakistan and Bangladesh and so on in terms of sourcing those LNG cargoes, resulting in the consequence that Pakistan has actually gone out publicly and stated that for the future capacity generation, they will rely more on coal and less on natural gas, just because there's uncertainty about the access to natural gas. Now, that has the direct opposite impact on CO2 emissions than what we wanted to achieve with a policy where we are changing our European energy system more towards renewables. So I think, getting back to the main point here, the policy needs to be based on a thorough fact-based understanding of how the energy system works. And that starts, in my view, with an understanding of energy return on energy investments and the levelized cost of energy when you start taking into account intermittency, the cost of grid enforcements, and the cost of storage.
When coming back to the European plans for 2030, I mean, we're currently around about 200 gigawatts of renewable energy, and their plans are they want to get to 500 gigawatts by 2030, which is 7 years away. So to put it into context, it's 300 1 gigawatt projects. It's phenomenal to try and achieve that. I mean, that will be a mix of different technologies being deployed over the whole of Europe. But Fredrik, more of a question towards you as well is we've got very ambitious plans in offshore wind as well as solar and onshore as well, but offshore wind specifically. And there are plans that are in planning, so there are projects that are in planning. But is the infrastructure there? Is the money there? Are the vessels? Are the people that are basically that we need? The companies that are they available to actually build out this in that time frame, or are those targets, naively a little bit too late? And then a follow-up question would be, and then to all of you is, are governments setting these targets and relying on industry to deliver on this, and they're just sitting back and letting them do it? They're very large infrastructure that the populations need for energy security reasons and to decarbonise. Are they relying on industry and the companies and banking to deliver this, and just setting these targets and hoping that we'll all go out there and do it? So I know it's a bit of a wider question. I'll start with you, Fredrik, but maybe you guys have a view on that as well.
And it's just debated, policy will always be flawed, no matter where you are in the world. So to a certain degree, I think we're quite happy to move this over to the commercial side, the private side. We've had, and we need the support of governments, absolutely, like any new technology, particularly in renewables. And we've had great support in Europe from the various coastal nations developing offshore wind. But it's also great to see this now go commercial, go into a proper business with financial models that work. This will be then a deployable, let's say, business case with a meaningful return on investments, and not be this subsidized product. Because that was just 8 years ago when I started this position at Clarksons. It was all deemed it's subsidized, nobody will invest in it as long as there's uncertainties around subsidies. Well, like anything new, right, you need to have somebody help it up and going forward.
Industrialize it, commercialize it.
Yes. But we are there now that, Google, Apple, all those companies are buying electricity, right, and paying also to a certain degree above certain grid prices. So it's a commodity now that can be that is commercialized. So this also kind of came out by EU having the 2020 plan, 20% renewable energy by 2020, because they wanted less dependency on certain other energy producing regions. So thanks God for that forward thinking back then, and now we are here, ready to take this onwards in a more commercial...
2030.
2030 is just around the corner. In my mind, we're there now, because when we see looking at ships to be ordered, the bigger assets needed, that's 2026, 27 deliveries for these vessels. Then there's only 3 years left. So we're already past 2030 thinking. That's just a number we need to use to model this, right? We're looking at 2040 and 2050. And also these wind farms, unfortunately they take a long time to develop, and we've seen the pains in there, and that's policies again, right? Everybody who's involved want to move fast. We can move fast, we can deploy. Again, flawed policies, and we do see now with the whole energy issues we're facing now, things are moving faster, they could be moving faster, but we're getting there. And what was the other part of the question?
With regards to, to build out these plans, there needs to be investment in the fleet. Yeah. To actually, no offshore wind farm is going to get built without the vessels to build the actual offshore wind farm. So, again, it's back to your point about uncertainty with regards to investment, the large capital that's required to actually order these vessels, the certainty whether that pipeline is going to be there for a long enough period of time to justify that investment. I think that really I'm wanting to understand from your point of view whether the targets for 2030 and then beyond to 2050 are achievable from a renewables point of view, and what do you see as barriers to that?
We have to then again sprint a bit more than the marathon here to get the supply chain up and running. If you look at just turbine installation, because now we're talking about offshore wind, just my last count, there's 18 vessels capable of what we're going to see as the, let's say, next generation turbines.
Yeah, 2026 onwards.
And that's nothing, right? For the global market. Will that change? Yes, because investors are smart, ship owners are keen, developers need these vessels, so they will offer up, hopefully, longer contracts to enable the ship owner, and the investments will follow, right? Right, Tønne?
I agree. I think that needs to happen, right? Because when you look at the scale of investments that we're dealing with now, we're talking about trillions of dollars a year for this energy transition. The scale of capital is so large that it's very hard for many of these small sort of Mittelstand type suppliers, right? That have kind of gone from small companies are now trying to go to big companies, right? In order to make that transition, it's relatively high cost of capital. I think that what we see now is when we're building out these industries at such large scale is that like some transformation of, let's say, commercial strategies and or business models needs to happen, right? And some more vertical integration, right? So the supplier is getting long-term contracts or even investment, we've seen in some cases, directly from the developers. It's not really that surprising. When you go back in history, you can see plenty of examples of this. Back in the day, a Ford Motor Company was building rubber plantations in order to make sure that they had enough tires to produce all the cars that they were selling. So I think, on the project level, the good thing is that the risk is fairly low because you have either governments sort of offloading the price risk through CFDs or other mechanisms, guaranteeing prices for those projects, and or PPAs, or we have corporates doing something similar. Again, returning to the supply chain, I think that that's from an investment perspective where we see the most risk, where we see the need for the most critical action in the near term in order to achieve these targets.
David, a couple of comments here that I think is quite relevant for our audience. Is one, access to capital is absolutely crucial, and if we look at the installation of renewable capacity in Germany as an example, over the last 2 decades, Germany has invested about $250 billion to increase their electricity production renewable from 6% to about 50% now. Their total installed capacity has gone from 150 gigawatts to about 230 gigawatts, but their load factor has actually decreased, meaning that you get less energy out of installed capacity because of the intermittency. And it just shows how extremely expensive it is and how you have to overbuild the supply side in order to do it. So that is one point, that the capital is absolutely crucial. But I think relevant to kind of what we do as a company, and we are shipping and offshore brokers, and I think something that we absolutely need to touch upon is access to yard capacity, because that is very often in the conversations we have with our clients, there's various uncertainties that they want to eliminate. Propulsion system, what type of fuel do I have, where's the access to capital, etc. And there seems to be this view that if you sort all of that out, the yards will be there and they're ready to build. But the truth is that yard capacity is going to be a huge challenge as well, because this is not only the offshore space or one particular segment in shipping, it's everything that floats basically has to renew itself now because of new regulations. And so everyone's going to the same yards at the same time. And we look at global yard capacity and we look at the boom that we had in 2007 and 8. Since then, we've reduced yard capacity by 70% or so. We're down from 1,000 yards to now just 350 yards or so that have real capacity. Yes, yard capacity will expand when demand comes back, but it will be the marginal yard capacity will be of lesser quality and will be more expensive. And when the complexity of building the various solutions, being offshore or shipping, increases because of new regulatory requirements, it also means that the lead time per project increases. So I think something that we're really underestimating in terms of reaching the goals that are set for 2030 is that you actually have to start ordering things now. We see a lot of, we haven't touched upon...
2 years ago, in fact.
Yes, exactly. And we haven't touched upon on carbon capture, but we do see a lot of potential in transportation of CO2. And there's a lot of carbon capture projects specifically in Europe. And a lot of them have actually target dates of startup in 2026, as early as 2026. If you go to a yard now and you want to order an advanced ship, we're looking at maybe delivery early 27. So it's just these things need to be taken into consideration at an early stage as well. And I think that's where a lot of our clients are so focused on the uncertainty on regulatory side or technology, etc., that they just completely forget about that there's uncertainty about yard capacity as well.
Yeah, that's critical. And you see LNG shipping has taken away slots for building WTIVs, for example. Basically only 5 or 6 yards in the world capable of like quality, global standard assets. So it's definitely a potential pain point going forward. But you had part question was back to financing. Keep in mind, Tønne, how many trips we made to financial institutions and banks trying to educate them on offshore wind. They've got oil and gas cornered now, right? They know that. They know shipping after 200 years of banking of shipping. They know oil and gas 50 years ago. And now we're sitting down with them trying to educate them on the bits and pieces, the ships, and why the contracts are either short or long. How does it work, O&M versus, or construction versus O&M. A lot of banks, shipping banks, have not, followed up on this, and they're just getting on board now with this. I think, financial institutions are a bit quicker on that, but it's a mix that we here as a team have been spending some time on to make sure that at least the capital finance side understands it. But it's been in the makings now a few years.
Yeah, I don't think people realize how actually Clarksons, it goes out of its way to actually look at supply chain, develop supply chain in new markets, de-risk companies moving into new markets, educating organizations, companies in new markets that are thinking of diversifying from one area into renewables. And we do go out of our way to actually try and educate these people and create the supply that then allows for these projects to be built locally in new parts of the world, which do. I have questions from the audience actually, which I'm going to try and pitch to all of you, not to anyone specifically. This is maybe actually will aim it at you.
You said you were not going to pitch them.
Are oil and gas companies offsetting CO2, the oil that they're producing? Maybe Kenneth, you might have a view of that as well. So when you put petrol in your car, is the oil actually offset from sorts of CO2 investment? Are they doing that or not doing that? Are they trying to do that?
No, not at any large extent, because then you're talking about the volunteer market, which I think has value. If you argue that you're investing in a project in certain parts of the world where you that are carbon negative because you can't reduce your emissions at your core business, and while you wait for technology to mature, then it can be a valid argument. But when you have technological options that you can reduce your emissions today, it doesn't make much sense to say that, well, instead I'm planting a lot of forest in other parts of the world. So the oil companies, as far as our interaction with them, are not to a large degree using offsets. But of course, they are subject to regulation. We have globally, there's now about 70 plus direct tax or market-based carbon tax systems. China launched their system last year. It's growing. The EU ETS system is expanding to include other industries such as shipping and offshore. So the oil and gas industry is obviously subject to a lot of carbon tax. So they're definitely incentivized to reduce as much as they can. But at the end of the day, the real emission comes from the combustion of fossil fuels, and that's not really part of their scope or their responsibility.
What I think we'll see is that they've been making a lot of money, right, lately, but they also know they have to deploy into renewables. So they'll take, dividends will be paid out, et cetera, and some reinvestment into oil and gas. But a lot of this money will hopefully, knock on wood, be deployed towards renewables. And parts of that, of course, is offshore wind, because a lot of these companies are, oil and gas, offshore oil and gas producers. So in that way, offshore wind will benefit indirectly for all the money they're making right now, because they have a bigger war chest to deploy to go more global in offshore wind and invest in bigger wind farms, 1 gigawatt wind farms. As such, that's one of the positive spins on this.
Let's see if they do that.
I think the oil companies are under significant pressure and significant challenges coming from different directions. So I absolutely agree with Kenneth. They are not using offsets to any large extent, particularly for what you're referring to, which is the usage of the gasoline, for example. So the so-called Scope 3 emissions, right? So they're focusing on reducing their scope 1 and their scope 2 emissions. Then they're looking at, how are we actually investing our money in terms of capital allocation? And most of the oil companies are trying to, allocate a larger relative share of their capital spending towards businesses which are, call it, less carbon intensive to some extent. So for some, that is investing into solar projects. For some, it's offshore wind. For others, it's carbon capture projects. So they are trying to, decarbonize their business as much as they can. But then they're still, faced with the challenge that when they allocate more of their capital spending towards, for example, relatively greener projects or renewables, those are generally projects which generate a lower return on capital. Whereas their historical upstream oil and gas business, currently at least at current prices, generates very high return on capital. But they have significant hurdle rates to invest now in their legacy business because of the need to decarbonize. And they're under pressure from banks, from shareholders, from the general public, and so on and so forth. So they are faced with multiple challenges at the same time. And my view would be that,
They'll be stranded if they don't, right?
Yeah, that's another concern, right? But I think a lot of the oil companies today are realizing that oil and gas is going to be around for longer, and we actually need to allocate more capital spending into traditional upstream oil and gas. They realize that, but it's just extremely hard to do it. But I think you've seen some changes over the last year or so. I think BP in particular stands out with, changing a little bit back again to slightly more oil and gas for longer, rather than saying that by 2030, we're going to reduce our fossil fuel production by 50%. They've scaled that down to 30%, for example, because they just realize it's going to be there for longer. Yeah. And for us, it's a very, very profitable business.
And I think I agree with you that there will be more investment in oil and gas, right? But I think one thing we haven't touched on is the interplay of supply chains between these various industries, between oil and gas and offshore wind, for example. So when you think about what is the effect of that, right? If you're at offshore wind, you might think, oh, well, it doesn't necessarily matter for me. But in fact, it does, right? It does matter. Because offshore wind has been built on the back of an oil and gas supply chain, right? That's a fact. And when you start looking forward, not only does offshore wind have to invest in a supply chain in order to support these very ambitious growth targets, but it actually has to replace much of its supply chain on top of that, right, in order just to keep current production levels up.
Because some of those vessels have gone back into oil and gas.
Exactly,
Yeah.
right? So we look at foundation installation, you look at offshore combination and walk to work. Most of the assets in those spaces, foundation installation, it's 2/3 of the assets that are doing that, installing the turbines for these offshore winds. Those are oil and gas ships, right? And you look at walk to work, maybe 80% of the supply of the ships that have been providing housing for technicians in offshore wind, it's oil and gas ships. And now with oil and gas being as profitable as it is, we'll see more investment, and there's an ability for oil and gas to actually pay more, and perhaps substantially more, for those assets. So again, that's contributing to this inflationary trend. But if you are a developer of projects, you have to be aware of this risk. Yeah, you have to be proactive. You have to not just look at your supply chain and assume that if you have the demand, the supply will come, because I don't think it's going to work like that.
To be frank, some of the utility companies, the electricity producers of Europe, or be that in the US or in Taiwan, were used to producing electricity but not being offshore operators. They're kind of maybe new, even though they've been doing it maybe for 10 years. It's still the dynamics. They didn't experience the oil and gas period. They just saw day rates of vessels, availability. Rates go down, availability up. And that's now changed totally, and it's almost like they don't believe it. Hence, we're going to Copenhagen tomorrow, right, and to talk to the wind industry. And the wind industry, the hardcore wind industry, the utilities and so on, infrastructure companies, they don't like the connection with oil and gas, right? They try to distance themselves from oil and gas. But we have to tell them, it's all interlinked, right? It's offshore energy, and it all somehow, links together. Yeah. So it's part of the opportunity and the challenges.
Yeah. Another question from the audience as well. Fuels, so the alternative fuels. I think we touched on it before, but these alternative fuels that people keep talking about. I mean, when's the general public going to see or get access to alternative fuels? I mean, electricity is one route for that, for transportation, but are we going to see other fuels being deployed for the public in any time soon, or do you think it's actually going to be a long? And also, I actually do know that you know that there's competition already for those alternative fuels from people who are already using those fuels.
I think that's quite clear. Just keeping it within the maritime space and alternative fuels for the maritime space. I think one, we need to start by looking at history. So up till now, we've been the only industry in the world that has been allowed to use the waste product from refining, the bottom of the barrel, the discounted product, always selling at a discount relative to crude oil. Whereas other industries such as aviation, which is under similar pressure to decarbonize, they're buying the start product. They've always bought the jet fuel, the opposite end of the barrel. And now we're being forced onto the same path. We're going to compete with industries that have been at a very, very different position. We're coming from that discount kind of mindset to now having to compete for the absolute premium products of the world going forward. So I think that is going to be a huge challenge for us. And then the second point is that we have this tendency to think, as Tønne said, like, if we build, they will come. If we start building ships that run on ammonia or methanol or whatever fuel we subscribe to, then supply would automatically be there. But first, we also need to recognize that the current production of those fuels today are fossil, all of it. And there are current users of those fuels, take the 200 million tons of ammonia globally, or 110 million tons of methanol that we use yearly. Those industries will also be in a position where they're being forced to decarbonize, pressure to decarbonize. So we're going to compete with the established users for those fuels for the same molecules. So that doesn't mean that we're not going to see some projects earmarked for shipping. It makes sense in certain situations where you have maybe off-the-grid electricity that would otherwise be lost, intermittencies, etc., that you can exploit to convert into some of these fuels, even at low conversion efficiencies, and it can make sense. But as an industry-wide scale solution, I think it's not very realistic that we're going to see that within this decade.
Okay. And in terms of pace of the transition, again, I think it's important to take into account here also the time frame of developing these alternative fuel supply chains, right? Because if you look at LNG as a maritime fuel, for example, we're talking a development which has been ongoing for 15 years, maybe even 20 years, to develop LNG as a reliable fuel for shipping. So I think it's ridiculous to think that next year or 2 years down the line we're going to have a ready global fuel supply chain for green ammonia for shipping.
We have to start somewhere, though.
Yeah, but it is just unrealistic. So when you start looking at the time frame here and considering these challenges, it's going to take a lot of time.
But I think it's an extremely interesting time for us as an industry, because my view at least is that we're going to need more of everything, absolutely everything. And a lot of our investors or our clients, I mean, they're uncertain about making their investment decisions, whatever industry it is, offshore renewable or shipping, whatever they're looking at. There's obviously volatility and there's a lot of things that you need to take into consideration. But when you look at the long-term trend of where we're going, and I think this whole green transition is going to be massively bullish for all of the industries that we cover. Yes, there will be differentials within various industries, as Erik touched upon with the oil and gas. I think we'll probably see with increased regulation, taxonomy, etc., that a lot of things that we're going to be absolutely dependent on will probably move towards private ownership, that we do it behind the curtains. Like transportation of oil, it's going to be here for the next 10 years. It's going to be here for the next 20 years. But as a big hedge fund, you might not be allowed to invest in that sector because of regulations. But it doesn't mean that it's not going to be there, and it doesn't mean that it's going to be profitable. Probably, I think we're heading into super cycle across most of the segments that we cover, because we just need enormous amounts of investments.
More of everything. Yeah. Okay, I think we're going to wrap up. I've taken some notes here. I think we've got these very ambitious 2030, 2050 targets across all sectors globally. There's still going to be black swan events, as you stated. There are going to be things that come up. We're going to have to make course corrections on the way to achieve some of these targets. I think that having targets is a good thing. But if we don't necessarily meet them, it's not necessarily a bad thing either. I think actually having something to aim for is good. We've got governments basically now supporting these targets. Hopefully policy could be more joined up and more efficient to make things happen faster. Oil is going to be around for the foreseeable future. So, you know, the peak is still some distance into the future, and then actually the green transition and the electrification of everything and the alternative fuels, you know, it's going to come over a longer period of time to replace that. So basically oil and gas industry is here for the foreseeable future, and there's going to be a lot of investment still made in that space. We in the renewables industry, we rely on oil and gas. We rely on the supply chain and those people because they work in both oil and gas and in offshore wind. We're very aware of that and thankful of their efforts and the investments that they put into that space as well. I think one of the takeaways that I've had from this conversation is, you know, you can't do it soon enough. If you're going to make decisions, do it sooner rather than later. But that's back to a confidence thing as well, which is very difficult to manage and communicate. There's a lot of education required and a lot of change. There may be some inflation, no, there probably will be inflationary inflation because of this massive investment. More of everything means scarcity of resources, which means prices are going to go up. And I think that we're all going to have to get used to that. I think that's the reality. I don't think we should be blue skying the populations or governments or policymakers or boardrooms. I think we need to be realistic about things. Prices are going to go up. And I think that's about it, really. I think a number of us are going to be in Copenhagen tomorrow. So we're going to see, it's going to be one of the biggest gatherings of the year for the wind sector, Wind Europe in Copenhagen. So that's going to be very interesting to continue these conversations with a number of our clients and the supply chain and speak to the developers as well. Obviously, we'll share everybody's contact details so that people can get in touch with each member of the team or the organisation as a whole. I think we've got another large event in Houston, the OTC event, which we'll be attending, and I think in May or June there's North Shipping as well in Oslo, which is another fantastic event where we see a lot of oil and gas and now renewables becomes a key part of that conversation as well. So, but I'd like to thank everybody for taking the time and joining this. It was an interesting conversation. Not everybody's 100% agreeing with each other. We've all got a slightly different viewpoint, but you know, I really appreciate the fact that you've joined and that you shared your experience and expertise with the audience. And yeah, I think we'll just wrap it up there. Thank you very much.
Thank you, David.
Thank you.